Buying a home is a dream that is shared by countless people, including you and me. In fact, it is one of the biggest landmark moments in one's financial life. For many people, it means different things. For someone, it could be a matter of pride, a family's nest, identity, and a smart financial decision. Whatever may be your reason, it is very important that when you start your journey of home purchase, you are aware and you do your analysis of all the parameters of buying your home. And one of the most important things to know is what will be the cost of your home. How much will it actually cost you? So here we're going to discuss about the actual breakup of your home cost and also help you understand how you're going to fund the various elements of your home. To understand this better, let's bring back our couple from two states, Krish and Ananya. We already know that they've decided to buy a home. They've decided that they cannot continue to live on rent forever and they are ready to take that plunge. Now, of course, like anyone else who've made that decision that they want to buy the home, they are scouting for their dream house. They are looking everywhere to identify which is the home where they're going to spend the rest of their lives. So they've started looking for various things to buy their house. They have decided what is the size of the house they want and how many rooms they want. They've started checking online sites, talking to their friends and family, and have gotten very excited and booked themselves a broker who will help them get to know the house. They've also checked the amenities that they need, whether they need a gym, a clubhouse, a pool, whether they want to go for a garden-facing house or a roadside-facing house or something which is closer to office. They have started doing basic due diligence and they have also identified that they need to check whether their developer is RERA registered. So basically they're doing everything that they can to figure out what is the house they want. So we already know that they want a 2 BHK apartment, given that it is a one-time investment and they're not going to do this again and again. So they want a decently sized house to be able to live the rest of their lives, even when they eventually start for family planning. They prefer a house which is overlooking the garden. They want to see greenery rather than the main road. Of course, they would take a house with a parking. They already have a car, so that is what they're looking at. Like any other couple who's very excited to buy their new home, and one such evening they realize that there's a new complex that has just come a few kilometers away from their home, and they saw the billboard advertisement and it said that 2 BHK house was available for 1.25 crores and they could not control their excitement. They were like, this is perfect, they can move into this house immediately. It's 1.25 crores. They would have to pay some 10% as down payment and move into their house. Rest would be taken care of by loan. This perfectly fits into their budget. But 1 minute, in the entire analysis that they did to find the house, they did not discuss anything finance. They did not even discuss their budgets. They don't even discuss how much they have in savings. And clearly they're just falling for the advertisement trap which says that the house is available for 1.25 CR. But is that the real cost of the house? In fact, eventually they would start having some of the questions with respect to their house, like what will be the cost of the home? So does this 1.25 crore include registration and other booking charges? How are they going to arrange for the funds for the house and how much loan will they get? So the first thing to note is, what is the cost of the home? What is the cost breakup of the home? So we saw that the cost of the house is 1.25 CR. So if you just take this into consideration, you generally have to pay 20% of the value of the home as down payment. So if we take that into consideration, they would have to take a loan of 1 crore and balance 25 lakhs will be the amount that they have to pay from their own pockets. 25 lakhs is termed as down payment. Down payment is an initial upfront partial payment that you make for the purchase of your home. So this is an amount that you usually pay upfront to the seller to book that place or to ensure that this is the amounts that you're paying, and the balance for the house is generally paid as a home loan. So basically the idea is that you generally never get 100% loan for high ticket items like your car or home, but you have to pay a portion of it from your side, and once you make that payment, the balance loan is disbursed by the bank. So this payment that you make upfront is known as down payment. So your total value of the house, that is 1.25 crores, is divided into 1 crore that you would have to take a loan for, and 25 lakhs, that is your down payment. Generally, your down payment is 20% of the value of the house. In cases where you have more savings, you can pay more as down payment. So these are the factors which we shall discuss eventually in the session as to how much loan should you take and how much down payment, or as a generic benchmark, whatever is the cost of your house, 20% would go as down payment and 80% is what you would get as loan. But is this it? 1.25 crores includes everything? What happened to the roof of the house? There are some charges which are generally not included in such advertisements, or you should definitely check for the breakup of the charges. So what are these charges? As we've discussed, the price quoted by the builder or the developer, basically the one who's selling you the house, is not the final price. There are additional charges which are generally payable. Now these charges may not be payable to the builder. You may have to pay to the government in form of taxes, registration fees, to an agent, but to you it is a cost and hence it is added to the overall cost of the house. So let's see what are these overhead charges. One of the first additional charges that home buyers have to bear is stamp duty. It is basically a type of tax that you have to pay in order to become the legal owner of your property. Now this tax is levied by state governments whenever there is a transaction of property. Basically when a property changes hands from a seller to a buyer. Now this is levied on all types of property, just not on residential homes. But yeah, so basically stamp duty authenticates your ownership of the property and it proves that you are the owner of the property. Without paying stamp duty charges, one cannot claim the property to be his or her own legally. Hence, it is very important to pay full stamp duty charges. Now, stamp duty varies from state to state as it is a state government tax and it is payable on the market value of the property or the agreement value, whichever is higher. There are many other factors which play a role in determining stamp duty. So you should consult with your lawyer who's helping you finalize your home purchase deal to know what is the stamp duty that you have to pay on your home. The next charge is registration charge, which is generally paid along with the stamp duty. So basically, once you pay the stamp duty, the document has to be registered with the Indian Registration Act with a sub-registrar. So this registrar basically is a registrar office in the jurisdiction where the property is situated. So the basic purpose of this registration is to record the execution of the document. The registration fee that you pay is over and above the stamp duty, and it ensures that your record of the stamp duty and the property transaction is maintained with the local government office. So in our case, in case of Karnataka, the registration fees is pegged at 1% of the value of the transactions. Now, as we saw that these two charges are payable to the government, the third charge that we must know of is goods and service tax, or GST as we commonly call it. Now, GST is payable on almost every other transaction that we undertake, and so we have to pay it on the properties as well. However, there are limits specified that 5% of GST is applicable on under construction properties where no completion certificate has been issued. If it is a ready to move in property where the CC, known as the completion certificate, has been issued, then no GST is applicable. In our case of two states couple, they have a ready to move in apartment, they've got the CC for the apartment, and hence they do not have to pay any GST. Now, after these 3 government taxes, the 4th expense that you have to incur is brokerage charges or commission that you pay to the real estate agent who helps you scout for the home and finalize the deal for you. Now, these brokerage commissions are subjective. You may directly go and buy the property from a developer, or you may know the seller. In that case, the brokerage charges are not levied. Where you buy through a broker, it is leviable. However, you can negotiate further on these charges and try to reduce your expense accordingly. The 5th kind of charge is maintenance charge. Now, once you start living in a property, you have to pay for the maintenance and upkeep of the property. So not just your particular apartment or flat, but the entire residential housing society. Now, generally what happens is that when you buy a new apartment from a developer directly, then the maintenance charges are taken by the developer upfront. So he may take maintenance charges for first 1 or 2 years for the upkeep of the building. And once the cooperative housing society is formed, then the members of the society charge maintenance monthly to all the residents of the society. Now, this maintenance also, sometimes builders may give you some kind of benefit, be like no maintenance for the first year as it is involved in the cost of the house. So you can figure out and understand how much maintenance you have to pay for the property, and also very important to know that how much maintenance on an average would come once the cooperative housing society is formed, because that would be a monthly cash outflow. Currently, you have to account for the one-time expense that you have to occur for this. Final charges are the ones where there is absolutely no cap, to be honest. It's your decoration and furnishing charges. Now, when you buy a new home, you can incur as much money as you want and you have on redoing your apartment and making it your own space. However, on an average, we consider 10% of the cost of the home towards decoration and furnishing charges. Now, where you have more funds and you wish to use it for the home, you can do that. Where you have less funds, there is no compulsion to use it before you move it into a house. You can, over a period of time, do the decoration and furnishing of your home. So these 6 charges form the roof of your home, or the overhead charges. Very important, do not ignore these charges when you're accounting for the funds that you have for the home. We shall discuss about that in detail in the next session, because that is not something which is included in the cost of the home. It is not something that you pay to the developer directly. These are the charges that you have to incur to be able to become your home owner. So what will be the actual cost of the home that two states couple really liked? So we know that the cost of their home is 1.25 CR. So registration charges on that at 1% comes to 1,25,000. Then there is stamp duty that you have to pay, which is currently in the state of Karnataka. So that comes to 7 lakh rupees. I know stamp duty can be very expensive, but then you have to incur these charges to have the name and the house registered legally in your name. So there is no way you can get away from these expenses. Then maintenance is something which we've considered nil right now, because the builder is giving an offer in which they don't have to pay maintenance for the first year. So maintenance is a place that where you can try and negotiate and get a better deal with your builder. Brokerage commission, it is 1%. So they got the help of an agent to help them get this home. So they have to pay the brokerage of 1%. Again, brokerage is something that you can try and avoid if you approach the builder directly, or if you're buying a house through someone you know. In fact, this is also something that can be negotiated. But as a general rule, 1% is the brokerage charges that one has to pay when they're buying their home. Decoration and furnishing charges, because they're going to move into a new home, they are planning to incur basic charges to get their kitchen running, to have some basic utilities item in place around the house. So they've considered 10% as their decoration and furnishing charges, and GST tax is nil here because they are buying ready to move apartment. So you're buying an apartment which is ready to move, you do not have to pay any GST on this. So when we take a total of all these charges, we come to know that the total overhead cost is 22 lakhs. Yes, so they have to incur over and above the actual cost of the house that they saw on the billboards, 22 lakh to become the owner of the home and move into it comfortably. So what will be the final cost of the house, or as we say, the present value of the home that they want to buy? It will be 1.47 crores. That is 1 crore 47 lakhs. So let's see, they were very happy to look on the billboard a house of 1 crore 25 lakhs, but when they actually added all the overhead charges to the same, the actual cost of the house that they have to bear will be 1.47 crores. So as we've discussed, the cost of the home is not what you look at or read in newspapers. There are many other parameters which are added to the same. Hence, you must consider all these charges before you shortlist or finalize the home for yourself. So let's see, once the cost is taken care of, as to how are you going to fund these different elements of your home purchase, right? So we've seen that 80% of the base cost of your house will be taken care of by home loan. So your base cost being 1.25 crores. So you would try and get a home loan of 1 crore. Balance 25 lakhs will be paid as down payment to the builder, and the overhead charges are also something that you have to arrange for yourself from your savings or through the help of your friends and family. So as we can see, what is the final breakup of your house? The total value of a house is 1 crore 47 lakhs, out of which 1 crore will be paid through your home loan, and balance 22 lakhs and 25 lakhs, that is 47 lakhs, will have to be managed by you from your savings and through friends and families. So how will you fund your home? You will take care of your overheads and down payment from savings, and the balance 80% of the base value of the home will be taken care through a home loan, which will be provided by any bank or NBFCs. We are going to discuss in detail about home loan and various aspects of the home loan. Now, as I said earlier, if you have the kind of savings, you can choose to fund the down payment, which is more than 20% of the base value of your house, and reduce your loan liability. But again, that is your personal numbers that you will have to go through and see if you have that kind of funds to be able to take that decision. So every time you look at the cost of your home, remember three things: the base value, which is taken care by home loan, your first floor or the down payment that you have to pay from your own pocket, which can be from 20% to more of the base value of the house, and your roof of overhead charges, which includes registration, stamp duty, GST, brokerage charges, and any other expenses that you have to incur to become the owner of the home and enjoy your home purchase. So let's understand the top 3 learnings from this session. The cost of the home includes the cost you see on billboards and other charges that you have to pay, which are added to the base of the house. You will get a loan of only 80% of the base value of the home. Balance 20% is something that you have to pay from your own savings, or you can borrow from your friends and family. We will discuss about this eventually. And the last thing is that these overhead charges are usually ignored when one is considering home purchase. Also, make space for an additional funding of 18 to 25% of the base value of the house for your overhead charges, or you may end up cancelling the deal, because if you don't have enough funds for stamp duty, registration or GST, there is in no way you can finalize the apartment. And make an additional funding of 18 to 25% of the value of the home, or it could end up being a deal breaker for you. So please be sure that before you even start deciding that whether you want to go for a balcony view or a road view, you understand the cost breakup of your home. After you've understood what is the cost of the home and you've gotten a better idea on the breakup of different expenses, the next session we are going to discuss about budgeting. We are going to introduce as to what is the value of the home that you can afford. How are you going to be able to afford the home by funding from your savings and also knowing your loan eligibility. So it's going to be a very interesting discussion. See you in the next video.